A very graceful good afternoon, everyone. Thank you so much for joining us today. And I'm Pooja Suja, and I'll be the host for the event. And I'm currently pursuing MS Finance and working as a teaching assistant for Finance Lab. As you all are aware that we all have gathered here to learn more about the Bitcoin analysis and the project that we worked on this summer. So first of all, we are honored to invite Andrew Bardin and his colleagues from JP Morgan. Thank you so much for taking out time from your schedule and joining us today. We hope to gain very insightful things from you guys. We are also pleased to invite Dr. Henry Wong and Mr. Wes Hin from Max Decision to join us. Max Decision has supported various lab activities in the past. We are very glad that you are gracing us with your presence today. Before we start, I would like to first express my gratitude to you, Dr. Ma, because for being so passionate when finding opportunities for us. We had a great time working on this project and we learned a lot more things. So thank you so much once again. A special thanks to you, Andrew, for being such a great mentor and for offering your assistance throughout the project. Your honest feedback helped us upskill ourselves. I know it must be challenging to manage time, and we truly appreciate the time you spent for helping us throughout the project. Andrew Bardin is currently a vice president for the Asset and Wealth Management Division at JP Morgan Chase. He has spent 8 years developing big data solutions to provide business insights across multiple industries. Currently, he works in the private bank, partnering with business leaders to drive strategic development of analytics, automation, and dashboarding projects. So he also holds an MBA from Texas McCombs. He's originally from Louisiana and currently lives in Frisco, Texas with his wife and his son. He enjoys playing golf, traveling, watching football, and cooking Cajun food. So Andrew, would you like to give a brief introduction about yourself and your colleagues and maybe share your experience about working with us?
Yeah, absolutely. It's been a real pleasure to work with this group this summer. I think we got a lot of bright individuals who really put in a lot of hard work and have really come a long way in their, Tableau skills and their analytics skills. And, don't let them fool you. This work is all of them and very little, of my input. So they deserve every bit of credit. I think we have Casey Stone King with us today, who is the head of financial analysis and analytics for the Private Bank. And also Mahesh is with us as well. He leads the kind of dashboarding and data development team on the MIS side in the Private Bank. We may have a few people joining intermittently as we go, but I had a couple more people confirmed, but I don't see them in here as of right now. But I think Casey's input and Mahesh's input is a fantastic start.
Definitely, we will wait for them and see how this goes. And we are so glad to have the opportunity to address such distinguished guests today. I know we have a lot of curious minds who would like to know more about the project that we have worked on. But before we start, let me ask you all a fun question. Let's hear from the audience. Who introduced Bitcoin to the world? Everyone. We can actually say that because he's a mysterious creator who vanished right after introducing Bitcoin. So yes, and it's a group named Satoshi Nakamoto, and no one knows about the whereabouts of him as of now. Well, I have a second question for you guys as well. Which country's official currency is Bitcoin? Yes, that's absolutely right. That's the first country who declared it as the official currency. But there's another country who has approved a legal tender very recently, which is in September 2021, which is Central African Republic. Well, during the next 30 minutes, you will develop a lucid perspective about the Bitcoin analysis and in general about the cryptocurrency market. And so for that, let me call Sayam Agarwal to start the presentation.
Thank you, Pooja. So, good afternoon, hello, and warm welcome to everyone present both in person and remotely. So, as you're all aware, that we are here today to present our topic Bitcoin analysis and modeling, and to conclude a summer-long project under the guidance of Dr. Lipingma and Mr. Andrew Bardin. So, what was the objective of the project? When the investors wished to switch to a different set of investments, Bitcoin emerged as an alternative option. So some are motivated since the market is unregulated, while others seek this for the global presence of exchange. One of the important factors in our analysis was the effect of Twitter influencers, as many were looking to them for the assurance before investing in an odd investing option. Hence, we decided to explore this relationship more by studying the Twitter sentiment on crypto market, and we further decided to add other sectors of variables such as commodities, indexes, and currencies, and so on. Let me take you all through the entire process from the onset to give you the background on our project. We initially retrieved our data in order to identify the factors that have a significant impact on the movement of the BTC price. Using Python and a variety of packages, including TextBlob, Pandas, Tweepy, and Twitter Search Scraper, we first retrieved the data. After gathering the data, we looked at how closely the independent variables and BTC correlate to see if the inclusion was viable. We then developed multiple models through trial and error to get the best degree of acceptability for accuracy and precision in predicting BTC movement. In order to demonstrate the collinearity between the independent factors and BTC visually, we developed the Tableau dashboard, which offers us a plethora of intriguing insights and is interactive for the viewers to draw the conclusions. My co-workers will assist us in navigating the dashboard and understanding its features. We utilize the text block package, which uses machine learning to extract polarity and subjectivity to make tweets from influencers quantifiable. Now, polarity and subjectivity will further be explained by my teammate what it is and why did we do that in order to understand it much in depth. The quantifying process will further be explained. In order to improve our outcomes, I would also like to draw attention to the project's shortcoming, which include our uncertainty over the data collection and the time period for which it is required in order to optimize the results. Now, I further on call upon Shambhavi to help us understand better about the crypto market. Over to you, Shambhavi.
So you can see my screen. Thank you, Sayyam. Isn't the word cryptocurrency used frequently in our daily lives now? So when did it originate? Well, it dates back to 2009, the year when the world's first digital currency, Bitcoin, was created. Whenever you introduce anything new to the market, it doesn't take long for it to be imitated, right? And this was true of Bitcoin. The market saw the emergence of rival cryptocurrencies in 2011. Today, there are more than 19,000 cryptocurrencies in existence. And for our analysis, of course, we cannot take 19,000 cryptocurrencies, so we took 6 cryptos: BTC, Tether, USDC, USDT, BNB, and Doge. We wanted to understand if the COVID pandemic had an impact on the crypto market. As you can see, the crypto market, which was $177.9 billion in 2018, which was a pre-pandemic year, increased to $262 billion in 2020 when the pandemic just hit the world. And as you can see, it skyrocketed in 2022 to almost $842.2 billion. So what happened to the crypto market during the pandemic phase? Well, as you all know, in 2020, the COVID-19 pandemic had a huge impact on global economy. Apple temporarily shut down all its locations outside China, and Bloomingdale followed it by closing all of its 56 stores. In the light of the COVID-19 ambiguity, Bitcoin, Ethereum, and other digital currencies attracted a lot of attention. Even banks started buying cryptos for the first time. The rise in the market capitalization of Bitcoin from 127 billion in 2018 to 455 billion in 2022 piqued our interest among all the cryptos, leading us to conduct a sentiment analysis. All the cryptocurrencies, as you can see in this crypto return chart, saw a boom in 2017, but in 2018, there was a drop, largely due to the speculative stories about how another cryptocurrency called Tether was being used to purchase Bitcoin whenever the price of the Bitcoin fell. In the slides that will follow, we'll explain what happened in 2018 in detail. So moving forward, this is a dynamic dashboard that gives us the BTC price on any particular day, the price change compared to the previous day, and the trade volume on any particular day. For our analysis, we had taken 5 years from November 2017 to July 2022. So you just click on any day, you get that day's Bitcoin price, volume traded, and the price change. This interesting function that Tableau offers us reduces the hassle of locating the data in Excel. The next chart, as you can see here, the BTC daily movement, the crypto candlestick chart. This offers more information because of the nature of the candlesticks. Since technical analysis may help investors see market trends and predict future price movements, reading cryptocurrency charts is crucial for traders looking for the greatest opportunities in the market. But, however, the validity of technical analysis depends on whether the market has priced in all the information or not. As you all know, the green candles show the price went up over the period, and we have taken monthly in our chart. You can take even minutes for the chart analysis, but for our analysis, we have taken monthly. While the red candles show the price has declined. The black line, as you see here, for every candle, it shows the closing price for the day. Apart from the price chart, we believe the trading volume is a measure of how much an asset or a crypto has been traded over a specific period. To provide more insights on the volume analysis, I invite Sagar to explain this in detail.
So thank you, Shambhavi. So in order to understand the volume analysis more in depth, we decided to look at the volume chart for BTC on a historical basis, ranging from a period from November 2017 to June 2022. As you can see, these bars here show the volume for this period, and this green trend line represents the price. It is very clear that both price and volume have been very volatile during this time frame. The reasons for this can be attributed to the market sentiments over this range. Have a look here. At October 2018, BTC volume was lowest. That was 3.82 billion US dollars. The reasons for this can be attributed to the months prior to this period. As of January 12, 2018, there were rumors in the market, as you can see here, that South Korea could ban trading in cryptocurrency and Bitcoin could depreciate by 12%. In the same month, on 26 January 2018, CoinCheck, Japan's largest cryptocurrency OTC market, was hacked, and a US dollar of $530 million was at theft. The results of these news could be seen over the time frame. As you can see, the BTC volume and prices both dropped during this time frame. On the contrary, looking at 80.97 billion volume, which was reported on February 2021, we can say that this attributed to the positive sentiment surrounding that period. There was a news that Tesla bought around 1.5 billion worth of Bitcoin, and the company started accepting Bitcoin as a payment. Apart from this, we also realized that there were other variables that affect Bitcoin, and we decided to see how these Bitcoin variables are affected. We divided the Bitcoin variables into three sectors: market indices, commodities, and other variables. As you can see here, market indices, we decided to take NASDAQ and volatility index futures. The reason for taking NASDAQ was that it comprised mainly of tech stocks, and cryptocurrency being affected by the tech companies, we decided that it would be a good fit for our analysis. The second one was the volatility index futures. Our reason for taking volatility index futures was that it is one of the great indicator for market sentiments. Coming on to commodities, we wanted to understand how does a Bitcoin react with commodity market. And for this, we decided to incorporate gold and oil in our analysis because they are one of the dominant commodities in the market. Talking about some other variables such as currencies and the 10-year government bill, we incorporate currency dollar and treasury bill because we wanted to see how a Bitcoin reacts to these traditional investments. You might be wondering why only specifically US dollar. The reason for this was that US dollar is one of the dominant currencies in the market, and it would be best we analyzed how the Bitcoin reacts to this currency. For treasury bill, we wanted to see how does a crypto react in against a risk-free investment such as a treasury bill. Further, I would like to call upon Garima, who would be explaining sentiment analysis more in depth, giving you the key features of subjectivity and polarity more in detail. Garima, on to you.
Can I ask a quick question?
Yes, please go ahead.
I just had a quick question. Do we know what like the percentage of US dollars make up that particular indices that we're looking at? Like, is that a high penetration, I'm guessing?
Yeah.
Just because I'm not super familiar with what percentage of activity is done in US dollars. Do we know, like, roughly?
For this, actually, we wanted to see how a particular currency behaves with respect to a cryptocurrency. And we decided to take the US markets because right now we wanted to see how volatile the US markets are and how is the currency affecting the crypto. Because you know what happened at the end of 2020, many investors started using crypto as a hedge. And that is why they started using crypto in their buy and hold strategies. So we wanted to see, as you know, that US market for now is like very volatile. So we wanted to see how is the US currency behaving with respect to BTC. So this is for a limited time frame.
Got it. That's helpful. Thank you.
Yes, sir. Yeah. Actually, what we did was we analyzed the candles. We were just analyzing the close.
Can you repeat the question?
Oh,
So I'll
sorry.
ask you that's the kind of.
So, okay, so we have a question that how did you make a candlestick chart using cryptos, right? Like BTC. So what we did here was the aim was just to see the average closing and opening price for the period so that we know a trend right here. Yeah. So we took a static data for this. This is not dynamic. So we took a time frame for this. And on the basis of that, we personally checked what was the opening and closing because this project, we wanted to analyze a trend for the Bitcoin market. That is basically the crypto market. So can we move on?
Yeah, that's
okay. So I'd like to hand it over to Garima.
Thank you, Sagar. Hello, everyone. I'm Garima Gupta. I'm currently a graduate student at UTD. Okay, so let me start by asking you all a very simple question. How do you feel about the crypto market right now? Are you fearful or are you optimistic? Or maybe you are somewhere in between. Both, exactly, somewhere in between. You will notice that probably emotions play a very great role when we are taking investing decisions. Oftentimes when rubber hits the road, it's your emotions behind the wheel.
And this is especially true with cryptocurrencies, where emotions run high 24/7. The market is very volatile. Definitely, it creates a stressful situation, but also it presents an opportunity to make a lot of money if you can understand the emotions of others and master your own. I know that's a hard part. So today I will talk about sentiment analysis, which can be used as a powerful tool used widely to just analyze the emotions of others and to take the strategies according to that. One of the examples of sentiment analysis tool used widely for the securities market is Fear and Greed Index, created by CNN Money to measure two of the primary emotions that influence investors, fear and greed, obviously. In words of Warren Buffett, quote, "Be greedy when others are fearful and be fearful when others are greedy." So definitely understanding the market sentiment can offer great insights as to our investment strategy. I will cover what is in sentiment analysis, how it works, and if that can be used to predict the next pump or dump in the crypto market. Crypto and Bitcoin in particular has been a raging topic of discussion from a long time now for all sorts of reasons. So naturally, a lot is said about the cryptocurrency on n number of social media platforms. So for our purposes, since Twitter seems to be in the center of most of the people's reactions and emotions, we have limited our scope to Twitter feeds for the purpose of our project. Okay, so what is sentiment analysis? In a very layman language, it involves analyzing text in a sentence to determine whether it is positive, negative, or neutral. This is done by assigning a score to each word, depending on how positive or negative the sentiment is. Let me walk you through our process so that I can explain better how it all works. So we started with identifying 210 crypto influencers on Twitter, and using Python, we extracted all the tweets of these influencers, which mentioned some keywords. Those keywords like BTC, Bitcoin, crypto, cryptocurrency, and blockchain. We pulled these tweets for last 1 year, that is from June 2021 till May 2022. Next, we assigned them a sentiment score. We use TextBlock, that is a Python library for natural language processing that uses a predefined dictionary classifying negative and positive words. TextBlock returns polarity and subjectivity of a sentence. Polarity lies between -1 and +1. -1 defines a negative sentiment and +1 defines a positive sentiment. Subjectivity quantifies the amount of personal opinion and factual information contained in the. Okay. So this here is a data extraction snapshot. We were able to extract 130,000 tweets in total, along with some key features like likes, replies, retweets, and quotes. So this is just a snapshot how the data looked like. But since the data was so huge, analyzing and reading every sentence in 130,000 tweets was definitely not a human task. So we used Python for that and TextBlock as I told you. So it calculated the average sentiment of every sentence and added them up. Using this, we created 2 Tableau dashboards. Now we wanted to do some data exploratory techniques. So in this first dashboard, tweet overview, in the first chart that shows the average daily counts of number of tweets each day. And the second chart shows the average count of number of impressions each day. Impressions is nothing but all the activity that was happened on a tweet. It could be like, it could be retweet, it could be a comment or a quote or anything. It just adds all those activities. And here, so it helps us to see which were the period where the activity was most on Twitter. We can see that from here also. We can filter it for any month to see how was the Twitter activity on that month. This kind of gives us this view that what are the time frames where Twitter was most active about cryptocurrency. And here from the third chart, you can see impressions versus BTC. There is more chatter on Twitter in both the cases, when the prices are going up or when the market is plunging. In both the cases, you'll see a lot of chatter on Twitter. So it is good to know what is the period we want to analyze. On the right section, on the top influencers, we can see the top N influencers that tweeted about the crypto market. So for example, if I see it in 2022, I can see Elon Musk was the highest ranking influencer who quoted with around 48,000 likes. and around 5,000 retweets. So definitely he had a part to influence the market. And also in the last section, you can see actually the tweets made by them in a snapshot. You could change the number of tweets we wanted to see, or you can change the number of influencers. Of course, Tableau gives you a whole lot of features to kind of customize and drill down to the level you want to see the data for. Next, we wanted to see how the tweets are actually affecting the price change. So here, for an example, I'll just run you through an example. Here, we selected Elon Musk. And as you can see on the day when he tweeted negatively about crypto, highlighting the crypto scam, let's see how the price reacted. So for example, he quoted this on January 21. So let's just quickly see if it is according to our expectations. Was the market down or was the market up? I'll try to narrow it down for you guys to actually see that. So see, when he tweeted negatively about it, highlighting the scam on the Twitter on the cryptocurrency, the prices also declined very steeply. So definitely there is a relation between the sentiment analysis and the price change. Of course, this will not be an exhaustive factor, and there'll be many other factors affecting the market, but this can be a very strong one. So leveraging the Tableau analysis presented here and in the previous slides, as a next step, we use quantitative and statistical methods to do predictive modeling. Now, I would like to invite my team member, Kevin, to talk more about the models. Over to you, Kevin.
Thank you. Thank you so much. Okay, thank you. Hello, everyone. I'm Kevin. I will talk about what method we utilize to predict Bitcoin movement and how well it works. Before getting into it, I would like to mention one thing here. Since our purpose is to predict Bitcoin movement, we made the Bitcoin return lag behind 1 day as dependent variables in all of our models. So at the beginning of the prediction, in order to predict the exact value of Bitcoin return, we were trying to use linear regression to find a linear relation between Bitcoin return and the other factors. But is that really viable? The simple answer is not. This table shows the summary of univariable linear regression between Bitcoin return and other factors independently. So as the table shows, the p-value of t-test for each variables are extremely high, except for the expected market volatility here. So by the way, we set 95% as our confidence level. So when the p-value is higher than 5%, basically we can conclude it is insignificant. So it seems expected market volatility here is significant enough, but from R-square we can see the R-square almost reach to 0, so it cannot explain the significant variation of Bitcoin return. So instead of using linear regression, we decided to jump into logistic regression to predict the movement direction of Bitcoin price. That is, predict whether Bitcoin goes up or goes down. So before showing the result, I would like to briefly introduce logistic regression, more especially binary logistic regression, which belongs to supervised machine learning, and the binary logistic regression is the most popular type of logistic regression. In terms of structure, it is very similar to linear regression, but there is a key difference here. Instead of being ordinary values as dependent variables, the dependent variables in binary logistic regression should be 0 and 1. In our case, 0 means Bitcoin goes down and 1 means Bitcoin goes up. So after we put in the training data sample into the logistic regression and running the regression, we can get the coefficient of independent variables here. So they're like head betas here. And then after putting new data into the models, we can get the log odds ratio, and then we input the log odds ratio into this function, the inverse function of logit function. We can get the probability of outcome 1 or 0. So how to make a judgment from this result? When the probability of 1 is bigger than 50%, that is a log odds ratio is positive, we predict Bitcoin will go up. Otherwise, it will go down. So next, I'm going to show 3 models based on binary logistic regression. Actually, we built up tons of models, but due to the limitation of time, we decided to just show 3 models here. The first model is about the independent variables in first model is just polarity and subjectivity. The reason why we put it here is that we were trying to see whether the pure sentiment analysis can predict the movement of Bitcoin price. So it wasn't good from statistic part, because there are 2 key measures here: the z-test and the RR test. The z-test is equivalent to the t-test in linear regression. When it is larger than 5%, we can say the independent variables is insignificant. So here we can say that the p-value of z-test for this polarity and subjectivity are all very terribly huge. And another measure is the RR p-value. It is the measure to measure the whole models, how well the whole model is. So when it is larger than 5%, we can say the whole model is not good enough. So here the model 1 in statistic aspect is not good. It's not a good model. So let's see how the performance of prediction. Okay, in the left table. Yeah, okay. Yes. What exactly? So you want to know the definition of the polarity and subjectivity? Okay, the polarity means when the range of polarity is from -1 to +1, and when it is more close to -1, which means the text, the natural language is very negative. The attitude is negative, and when it is more close to 1, which means that the text is more positive. And the subjectivity, the range of subjectivity is from 0 to 1. When it is close to 0, which means the text is more objective, and when it's close to 1, it means it's more subjective. So that's the definition of the polarity and subjectivity. Okay, so yeah, okay, so let's see the prediction performance of the model 1 here. So the left table shows the manual calculation of the prediction. So here we can see the odds ratio. When the odds ratio is negative, the probability of going up is less than 50%. So how do I remove the?
So it's not viewable for that. So
Okay.
that's fine.
Okay, so the prediction result will be the 0, which means we predict the Bitcoin will go down, and this column is the real data of Bitcoin return in the next day. So when it is positive, we just put the result here. It's 1 here, and when it's negative, we just put 0 here. So when the value of the prediction columns matches the value of this column, we will get a true here, which is correct prediction, and otherwise it's a wrong prediction. So overall, the accuracy of the prediction is about 57%. And here the picture shows the confusion matrix of the prediction. In the deep blue area, it's called the true negative area, which gives us how many value predicted negative is really negative, and this is false negative area, which gives us how many values predicting negative is really positive, and the same logic of false positive and true positive. So in general, we have 70 days predicted right correctly here. So that's the performance in the prediction of model 1. Okay, so next, this is the model 2 of the binary logistic regression. Here we have 3 independent variables. They are polarity and the Nasdaq returns in the previous day and the US dollar index return in the previous day. So from statistic part, like the R test and the Z test, the p-value, they're terribly high. So it is even worse than model 1 from statistic measures. But why we put this model here, it is because it has the highest accuracy in prediction among all models we build up. So here we can see the accuracy of the prediction here is almost 80%. So we have 23 days predicted right here. Okay, so this is the last model. There's only one independent variables here, which is expected market volatility. And from the statistic measures, we can see the p-value of t-test is just 5%, and the error p-value is even less than 5%. So from statistic point of view, it's a very good models. But let's see the prediction performance. Oh, it's not good. It's just about 50%. So that's the result of it. Okay, so did those models perform well? For model 1, it is not good in both statistic measures and prediction performance. And for model 2, it performs well in prediction, but it is not good in statistic measure. And for model 3, it's significant in statistic aspect, but it's not good in prediction outcome. So there might be one reason, which is the efficient market hypothesis, which the semi-strong form tells us that all the public information is included in the current price. So it's hard to use the previous day's information to predict the next day's the return or the movement of next days. So okay, so is there any chance to potentially improve modeling? Okay, first you can increase the size of data sample. Well, it is always a good movement to be improved in statistic part, and we can use some technical method to boost the inputs, like weighted average of sentiment analysis based on the followers or likes, or we can use moving average method to do some things like that. And also we can try to use other factors as inputs, because since Bitcoin is influenced by many other factors, and there should be some factors we didn't consider, which has more impact on Bitcoin movement. So thank you, guys. I will invite Sam to make a final conclusion of our project. Thank you.
Thank you, Kevin. So to sum up, we effectively have forecasted the movement for the next day, that is on May 14th, 2022. All the 3 models showed an increasing trend. And like any other process, there's always a chance to improve and optimize our results. So if we incorporate Kevin's suggestions, we may improve the models. We may get more accuracy at any given point of time. Given that the Bitcoin is very sentiment sensitive and that several factors influence the movement of the Bitcoin, we can also view how the volume had played a very crucial role when we were navigating through this dashboard. Like we can see that the BTC volume is the leading indicator for the BTC prices over here. See, these spikes indicates how the prices of the Bitcoin was following the volume. Through my experience on working on this project, we have learned that Tableau allows us to navigate and make the overall sense of the data through various different lenses, giving us the flexibility to drill down and analyze any particular factor at a minute level. These dashboards are very useful for visually exploring large data sets and understanding the relationship between the different variables at a glance. In conclusion, I'd like to call the project to a close and express my sincere gratitude to all the team members, both those who presented today and those who are present virtually with us. Special mentions to Sukrut Bargaonkar, Ayush Vyas, Arya Shah, and also Fran. As they say, talent wins games, but teamwork and intelligence wins championships. Namaste and thank you. Now I would like to hear some of the feedbacks from you, and we are open for the questions from any of you guys.
Yeah. Okay.
Yeah.
That's very important. All the credits go to them. Yeah, any questions?
Feel free to ask questions.
Right.
Yes.
So, when you perform your predictive modeling, I saw that it shows a very small time frame. But you consider good results with a larger time frame.
So the question over here is from the audience is that while predicting the models, we have chosen a small data set, and why couldn't we increase the data set in order to get more accuracy? So the answer to answer that, first of all, when we drill down the influencers list and the activities from the various models such as Twitter Search Scraper and Tweepy, we had a limited access to that, and the API does not allow us to go beyond a certain level. And secondly, when we are going to mine that kind of data, that is, this was already 130,000 plus 130,000 plus tweets that we have extracted and made the polarity and subjectivity as a quantifiable factor. But if we do it more, our PCs were not that equipped so that we can get those kind of processors, and it would have taken more than 3 to 4 days to get those outputs. So in that way, we were restricted in our modeling part, and these are the reasons why we couldn't go beyond it. Yes. So, sorry, I cannot.
It's from a historical.
Yes, that's correct. So for the team who's present online, he just asked if the output is from the historic data. So the answer is, a simple answer to it is yes.
Very good question. Yeah. Yeah, it's always challenging to collect the data for analytic projects. So they have been trying very hard to download the Twitter's data, but yeah, maybe in the future, so we can use the cloud computing to increase the capacity of this big data analysis. Yes. Go ahead.
So
Yeah.
I think it's 6 variables that you guys chose to.
Yes.
I assume you considered how the correlation between those variables could impact predictive power.
Yes.
How did that factor into this?
So the question over here is, we have taken into consideration 6 variables, and how do we correlate in order to get a better model? Am I right? But
yeah, you considered the correlation between the variables.
So yeah, we had a multicollinearity matrix over here. I can show it to you. Yeah. So like you can see. Yeah. Oh, sorry. It's behaving differently.
Yes.
Yeah. Over here, as you can see, like we chose those factors which are very highly correlated and which are like, for example, over here, if we see subjectivity and polarity, from the statistical point of view, it was not showing that of great correlation. But if we see that that's on a year's timeline that we are seeing, and not there are particular moments at which it comes into a wave of high correlation and low correlation. So we could not impact or incorporate that as a foolproof modeling when we were trying to do that. Although if there are other variables, if we see like NASDAQ and VIX, they proved to be highly correlated with that of BTC. And we thought of including and making more sense while including this in our modeling. So.
Very good question. Yes. When we consider modeling, so the multi-collinearity between those independent variable always is a concern. So that's why Kevin tried hard to, play with the models and change the independent variable to see, which variable can play a major role. Yeah, definitely. So we always need to check the multi-collinearity between those independent variables. Yeah.
It's a trial and error process.
Yes. So, any questions from our guests online?
Yeah, are there any other factors or correlation metrics that you were looking to use or evaluated as part of this analysis, like the S&P 500 or some other?
Sorry, I was not able to hear you. Can you come again?
Yeah, can you hear me now?
Yeah, it's fine.
Were there any other variables that you looked at in your correlation analysis? Obviously, you used highly correlated variables, but were there other things that you considered?
To be very honest, we did look upon the other variables. We were trying to incorporate the dollar, not just the dollar index, but euros and pounds for that matter. But when we had included that many variables into this, so it wouldn't have provided much more accuracy. And at some point of time, if we see that dollar is highly, it has the inbuilt factor of other currencies also into it. So these were the factors that we had to exclude, and we had to include one variable which could represent, a very best variable of that particular sector, be it commodity, currency, or market indices for that matter.
Interesting.
Any more questions from our audiences? Yeah.
That's a quick question. So now that you guys have been through the whole project, how do you think having tools such as Python and Tableau kind of helped you to visualize the data and guide the journey of the data exploration versus kind of being anchored on what you think it might be, right?
Yes. So, the short answer to that is when we are trying to incorporate and drill down the data using the Python, definitely it allows us the flexibility to play around it much more. And when we are choosing Tableau to visually represent our data, see, the same thing can happen in PowerPoint presentation, but PowerPoint presentation does not allow me to navigate and play around with any kind of particular dates or any kind of ranges that we would want to choose, or probably any kind of drop down list that we had to choose. So yeah, these are the key features which were distinguishing from a normal methodology and proved to be quite effective in our project.
Are there any factors that you would want to dig further into at this point?
Any factors? Yes, I mean, we would definitely would want to explore more of machine learning, like how does it work and helps in predicting part in future. And uh, more than that, we would also like to understand the features that Python offers us, if there is any other library which we did not explore maybe during this project, what it can do and how it can make our lives easier to get to a particular conclusions.
How did Python help you with this particular analysis in terms of visualization or compiling the data? Like what did it allow you to do that other tools might not give you?
Yeah, so to be very honest, Python was our primary chosen way for the coding is because this was a new tool that was to our team of a whole 10 finance students. And we were learning in this whole process. At the same time, the project is the best way to experience the whole thing, to get into that real life scenario and to explore more. So that's how we drill down to this particular methodology to do this thing. However, in future, in the upcoming fall semester, we would also be getting to know more about the other languages, such as R and SQL, wherein we can play around with the database and data tables. Yeah. I would also call upon our team so they would help us answer the questions better. Yeah, Ayush and Kevin, if you
I
can.
think we mainly use Python for extraction. Extraction was the hardest part when we started playing with the data, because if we don't have the data at hand, it's very hard to visualize or do anything with it. So especially integrating it with Twitter was a challenge. So we were just researching what are some of the best techniques we can do it with. And the best technique I found, at least we found on Twitter, on Google, was to kind of integrate Python with the Twitter API. And that helps to kind of extract the tweets very simply. So that's why we went with Python. And of course, we got to learn a lot of it. And it is a wonderful tool, definitely.
And you know that Excel has its own limitations.
Yes.
Yeah, the Excel add-on has its own limitations. So we decided we'd be going forward with Python because it's fast and accurate.
Yeah, so I kind of want to pile on here. So I know some of the work that definitely Kevin put in and probably others, in the Python code, but like just to kind of give you a sense of how this works, because they didn't go through technical stuff as much. The way that basically the code works is that it's searching through public Twitter data for certain keywords, which is a massive amount of data just to search through, right? And so and then on top of that, basically what he wrote was a loop to kind of loop through each day and look through each one of those keywords. And so I think it was a loop in a loop because you're searching each day for each keyword, then you go to the next keyword, then you go to the next keyword. And then once that goes through, you're hitting the next day and doing it all over again. So that, continue iteration on every day through every keyword is something that, you just can't do with traditional tools like Excel and stuff like that. I mean, you can't even do it at Alteryx, to be honest.
Yeah. Yes. Yeah. Definitely Python is a better option when it comes to that.
Sorry, I'm gonna toot your horn for you since you guys aren't doing it. So.
Do we have any question in the chat box?
Yeah, so we have one question in the chat box. So, Krishna asks us like coal can be an addition to the analysis with the high power computers competing against each other, and coal is still major source of electricity in major Bitcoin mining countries to solve the complex math problems, and mined crypto is limited. So yes, Krishna, yes, yeah, it's a very good suggestion, and definitely if we want to extend or this project, we will definitely look out at that as an option that we can explore and learn more about it. So yeah, that's a very good point. We might have missed on while doing our analysis.
Talking about this, Krishna, so oil actually behaves similarly to coal because many companies who depend upon oil are also influenced by oil. So if there are tech companies that depend ultimately on an oil component, so they'll be affected. That's why we decided to take NASDAQ index, which comprises mainly of tech stocks, and we also incorporated oil.
Yeah. And another reason is that we wanted to include one major variable from each sectors and not to populate with many different variables in order to serve the purpose that we wanted to do the predictive part of the Bitcoin movement.
That answers your question.
Yeah.
So we have a question from the audience.
Yeah.
Question. Suggestion that it makes that this project. Do you consider already using news headlines as the source of data? And moving forward, how do you implement that?
Got it. Yes. The question from the audience is that did we consider news headline as one of the source of our independent variables while we were doing this project? So yes, initially we were contemplating on news as a very good source of how the Bitcoin market would move or react. So there was one particular element which we included during our volume analysis, to be very honest, and that was mainly due to the news and not just restricted to any Twitter influencers. And standalone, when you see from Twitter influencers point of view, it is mainly a byproduct of what the news is going around. So we did not want to, duplicate any kind of data that we were trying to take into consideration.
It's more consistent on a daily basis. Do you think the quality of headlines is much better than?
Yes, but so over here, he's asking like if the quality of the content on the news is better as compared to Twitter is what he's asking, and is news more structured way as compared to that of Twitter, because news is coming on daily basis, and Twitter is something which is at the will and discretion of that particular influencer. So to answer this question, when we mine the data, if you see that 130,000 tweets, that was in the period of 1 year. And if you go and check our database, that's almost like more than 10,000s of tweets on any one particular given day. In fact, why just one day? We just went on to see that on seconds basis. All right. And secondly, news as when it's structured from one point of view that it comes on daily basis, how would we drill down to have one particular data source for our news? And if in case we also incorporate multiple data sources for news also, so that there might be again the duplicacy of that news headlines. So yes, we were thinking about that as well. And since
Just to add, news definitely is a more structured way, but it is also more of a factual way. And what we were trying to capture here were emotions. Twitter is basically the best platform to express your emotions and opinions.
Yes.
So it gives the frustration or the highs and the lows of the emotions. I think it clearly explains better than the news. News can be a little monotonous and stating the facts, and here we were just trying to capture the sentiment. So
Yes.
that was the essence we used Twitter.
So opinions is also a very great role that plays over here.
Compared to news, which is like, you can say that news is not so spontaneous. So what happens on Twitter is when influencer tweets, so there are likes, there are quotes, there are relikes, there are reposts, there are many factors that come into play.
It's possible that Twitter is also influenced.
Yes, absolutely.
Yes, sure.
It does.
In fact, all the variables that we have taken into consideration might be influencing each other at that point of time.
We have incorporated that in impressions. If you go to,
Yeah.
Thank you.
Thank you.
So did you consider like technical indicators or chart patterns of this? Like it can be used in some of the predictions, or it was just the factor and things. Like you considered the technical indicator parts of the chart patterns.
so for this project, we had a focus based on emotions and sentiments. So it was all revolving around that. So based on that, we decided to see the trend. And that is how we predict the movement. I mean, yeah, we can take your suggestion, we can incorporate and see through many things. But for this project, we had limited the scope.
Yeah, the scope can be expanded as much as we can, but in order to get more predictive based things, we have to limit that and restrict that to certain amount of variables, because we can just keep on adding, but then what is the influencing factors might we might lose on the essence once we do that. So the question over here he asked is like if we did incorporate any of the technical charts while incorporating our prediction analysis. Any more questions?
Twenty-six was the highest.
Yeah.
76 was the highest.
I mean, I'm just out of curiosity, what is an acceptable predictive model? Like if you're suggesting this to an investor, or you can expand it.
Depends upon the risk tolerance. Because the testing sample is small, so we cannot just say.
But what's like a good thing?
It depends upon the investor, to be honest, because every investor has a different risk tolerance.
Yes.
So if I'm predicting for someone and he's a good, wealthy investor, I will set the range a bit low because he can take risk. So it is on the investor, to be honest.
Yeah. So the question over here for the people online is that what was the optimal range of accuracy that we could have considered while predicting, and what was the highest accuracy level that we reached? So the answer, to summarize, the answer was like it was around 75% that we had reached as at the maximum. And if what is the optimal range? So the answer to that is it depends upon the risk tolerance of any investor at any given point of time. So what is the objective and what is the goal that we want to reach is based upon that we can adjust our accuracy and model and to get better suggestions for that.
So the prediction, since the testing data is only for a specific time period. Now, in order to test your model, you definitely need to back test your data.
Yeah.
Not just so far the results are only based on that 1 month of prediction. But it still can tell us, the model perform well after sample, right? So we, split the data for the, the estimation sample period, the training the data, and do the testing data. So the prediction accuracy is based on the new data, right? So that you can, from here, you can also tell Bitcoin market, there's some friction, right? Even though you use the public information in the past, you can still predict the market movement. If you are already learned on finance class, we know the financial assets, the price movement is a random walk, right? It's basically just move around, right? If you can predict the price movement, you can definitely bet on your investment and make a ton of money. Yeah, but from this project, 76% of accuracy. That's huge. Do we take any more?
So I guess we are good to
I have
go.
a question for the speakers. Thank you. So considering the current scenario where we can experience inflation, and we have also experienced such unprecedented patterns such as COVID and the war in the past. So I just want to know, what are your views about what to expect from the next FOMC meeting? So are there any views about it? Because I just wanted to know your perspective about it. Like I was reading in the morning that Fed is planning to increase the rates again by 75 basis points. So what are I just want to know what your perspective is about all of this.
I can give you my perspective. My perspective, I mean, if you look at the data this morning that came out, inflation is definitely a lot, less than they were predicting. So, I would expect more than likely a rate hike, but probably, it might not be 75 basis points. It might be 50 basis points, So that would be my take on it. And I do want to say, I just want to apologize to you guys. There was some issue with logging on to Teams from our JP Morgan computer. So Mahesh has been trying this whole time, and I know a few others. And I think Casey might have had some problems. She ended up working out, but there probably would have been some more people here. So I just want to say that I probably should have checked that link before we went for it. So that's on me.
That's all right.
Yeah, and I would just
That's okay, Andrew. Next time we can invite them on site.
yeah, that'd be even better. I'd love to come visit in person.
Yes.
I was going to chime in on that too, right? Because my team leads the planning and analysis for the Global Private Bank. And I would say the questions you're asking, we're asking too. And we're running sensitivities sort of real time to decide what will the macroeconomic variables, what impact is that going to have on our financials? And I would tell you it's changing by the minute. And last outlook, we had a Fed funds rate that looked like 375 at the end of the year, and now it looks more like 350. And that's the reality, is that those macroeconomic variables are changing. And I think some of the sensitivity analysis that you're working through in some of these Tableau dashboards is very comparable to what my team does on a regular basis, which is to say, we don't know, but here are the implications to the extent those macroeconomic variables change. And that's why we need like tools that are flexible and nimble and can like move with different assumptions. So I think like what your team is working on now is very relatable to like what my team is doing on a month-end basis to decide what our revenues will be in the global private bank. So I find it super interesting.
That's great to know. In fact, we can increase the scope of the project next time and come up with a better presentation. There's always scope for improvement. So yes. So are there any questions for our speakers from the audience? So I think I would like to call upon Dr. Ma to address the audience.
Hello, everyone online, everyone here. So let's give a big applause for all the team. I will say this will be a perfect event to celebrate the end of summer. So hopefully the Texas hot will go away quickly so the weather can cool down. So I would like to thank Andrew. Thank you. So be so supportive for, our students. Andrew is a great alumni, always give back and actively involved in many activities. This summer, so he has been meeting with the student regularly, give them advice about many tricks in Tableau, and also guide them through of the Python package how to collect the data from Twitter. Thank you very much, Andrew. So thank you for your support. Without your contribution, we cannot make this project so successful. Now we definitely have something to present you, but since you are not here, so we will invite you for another on-site event. You have to come here to collect this award.
Thank you guys so much. It was an absolute pleasure to work with all of you.
Yes. We order a plank for you. So hopefully we will see you soon. Now, I also would like to thank the whole team. In summer, they has been working in the lab 20 hours per week, provide services, help the student, faculty to use the lab at the same time, tutoring the students for some finance courses. At the same time, they are working on this project. Let me tell you the truth. Most of you, they didn't use Tableau at all before this project. Just 2 months, you can tell so how much they have learned and apply the data and use the Tableau and also Python on this project, how much improvement. So this is very encouraging for our students. So if they can do it, you can also do it. Yes. Oh, it's just for the finance lab. Oh. Yeah, welcome to use the lab.
Dr. Mara, real quick, if you don't mind.
Yes.
So, talking about the tools that you guys use to do this and, the tools that the finance lab is really, pushing students to use over the last couple of years. I think it'd be really great. I hate to put her on the spot, but maybe if Casey could kind of give her outlook on, how, she thinks these tools could actually be used in the market for traditional finance jobs and like what that looks like in the future. I know she's been a huge advocate for the kind of work that I'm doing. And I think that, it'd be really great. She manages a huge team of finance professionals. And so I think it'd be really great if, she can kind of give you that insight just real quick. I hate to put you on the spot, Casey, but.
No, yeah, for sure. Look, these are the tools of the future. And I certainly see finance evolving into very technical like roles, right? Where people are able to mine and build their own data on their own, build assumptions and support analyses themselves, right? And that finance professionals become not only technical coders, but also CFOs. And I am 100% behind my teams are constantly getting trained on Python and Tableau and Alteryx and these tools that are the tools of the future, right? As much as like we use Excel on a regular basis, the tools of the future is in automation. And I feel very strongly about that and encourage my team to do those trainings, and we offer them at JP Morgan. But the fact that students can come in with some already some experience in those tools is even better. So I'm a huge advocate. I think it's the tools of the future. I'm 100% behind my teams becoming very technical coder-like in nature, and also CFO-like in terms of like using that data to influence their partner for their partners.
Yeah, that's really great. So we can continue this partnership in the future and sponsor the student working on some analytics project, practice their tools, practice their skills using those tools, you know, Tableau, Python, or learn different packages. For this topic, you know, so even though this is just a preliminary result, but it already show many interesting, findings, and of course, so we also talk about inflation, and also the mining industry is definitely important components in the Bitcoin market. And if you read the news, you probably heard about many mining companies have to shut down their plans. So because the U.S. hot wave hit those industry. Now definitely Texas have a very crypto friendly policy. Last year, in May 2021, because the China government ban the Bitcoin mining industry. So therefore, many of the miners, they come to Texas, build the plants. This is definitely so something we can incorporate in this project in the future. I also would like to thank so Dr. Caroline Reichert, so our director of MS Finance Program, and also project manager Penny Jiang. So they are here so in the lab. Would you like to add something, Dr. Reichert? Dr. C, please. Come here. Yeah, you need to move there. Otherwise, audience online.
So hello to everyone online. Hello to everyone here. I just really want to commend the lab and Andrew and JP Morgan for this project and giving the lab this great learning experience. I agree, the skills of tomorrow are exactly the ones you're talking about and that they're building in the lab. And it's a great project and a great opportunity. And so thank you guys. Well done. You should be very proud, and thank you for the opportunity.
Thank you, John. But not the least is one of our lab workers, Kevin, and also another lab worker is Fan Lin. They are graduating. I would like to present this honor award for Kevin's hard work in the lab. So Kevin was a great student.
Thank you.
Yeah, show the online.
Thank you.
Thank you.
Thank you. Really appreciate it. Yeah.
Hope them, wish them the best.
Yeah. So, thank you.
That's close our today's workshop. And definitely in fall, in the lab, we plan more events and workshops, training sessions. Please stop by to use the lab and make friends. Thank you, everyone, to join with us online. Hope to see you around.
Thank you.
Thank you, Casey. It's a great pleasure to meet you.
Oh,
Yeah.
absolutely. Thanks for inviting